Hi everyone, I'm Karin and I'm a film producer and a distributor. I've been producing independent US films for the past 20 something years. During that time, I've also been distributing independent Chinese films. I'm really thrilled to have my good friend Gary Chou here. We're partnering on a new initiative and Gary's going to help us dive into the changes that we're seeing around us. Gary's also going to help me unpack what I learned from a recent research fellowship at the Harvard Kennedy School. Gary and I will be talking about fiction and nonfiction, but when I get into my research, we're going to focus specifically on US documentaries.
Hi, I'm Gary, and I've spent the past few decades working in a variety of roles, mostly in tech and venture capital, working with early stage founders and creators, also as an advisor and an educator. And Karen and I have actually been here before. In 2020, we had a conversation about rewiring distribution networks, and a lot has changed since then. So let's talk a bit about why we're here.
Thanks, Gary. So I want to walk us through the research I did at a new film fellowship that's offered at the Harvard Kennedy School's Shorenstein Center. It's called the Documentary Film in the Public Interest Fellowship. And because the research can be dense and might feel opaque because the film industry is pretty opaque, I've structured this research share into 5 key takeaways. We're going to walk through each one in detail, and you might see me referring to notes because some of this information is nuanced, it's precise, and some of it has to be kept discreet. We'll also cut to some slides to help with some more visual information. But before we get there, I'd love if we can just talk a bit about the macro context and the challenges that we're dealing with. So if we can set a table for the conversation.
Yeah, so let's take a step back. Karen, what led you to do this research in the first place?
Well, when I first got into producing, film was what I would call the dominant cultural um, medium. It was the most powerful and the most popular art form of the 20th century, but a lot has changed, right? We see an ongoing disruption of the business model that underpins filmmaking. That has changed our cultural output. So go back to the mid 2000s, the home video market was the main revenue for scripted films. That DVD market has collapsed and it hasn't ever been fully replaced. So that's loss of revenue number one. Then around the same time, YouTube launched. Then 10 years ago, Netflix debuted their streaming platform, and that business model has changed not only how we make films and how we profit from them, but really how we watch them. So that's severely disrupted the theatrical business, loss of revenue number two. Then during the Trump administration, we see the Paramount decrees officially come off the books, and that effectively ushered in our current end-to-end supply chain ownership era. So what we see today, we see buyers raising capital to verticalize their operations so that they can make more films to compete in this new market. That means less buying. So that has discouraged investment into independent films, and it's kind of all led to a collapse of the market as we knew it for independent cinema.
And so I think all those changes that you are describing, I think if you zoom out from there, you could characterize this really as a massive kind of shift of power from the old model that used to work and old incumbents to a kind of new emerging model with new incumbents. And the difference between those two, as you described, is these new incumbents now control production and distribution and exhibition end to end.
Yeah, I think that's exactly right. I mean, and the threat to the art and the business go hand in hand, right? So on the one hand, the consolidation of power has the power to create a new kind of monoculture of cinematic storytelling, where what we watch at home is informed really increasingly by data-driven decisions. That threatens the legitimacy of the form. The ethics of storytelling are being pushed and changed by corporate business objectives. So you have to ask in this environment, how do filmmakers continue to retain creative authority?
And I think also like when you kind of consider a significant change like that, there are after effects. There is disruption that happens and dislocation that happens, and that happens at every level, whether it's economic, cultural, or social. So before we get into the details, like let's talk about those last two. Like, what are some of the cultural and social stakes here?
Yeah, I think that's a great question. And to talk about those stakes, let's talk about risk for a moment, right? Film is both a massively expensive and labor-intensive commercial product, and it's an art form. And so because of that unique tension, risk-taking in movie making starts at the most minimum of deviations, right? A film that's 60 minutes long, not 70, is a risk because film festivals may not have a place to put it. A film that mixes genres is a risk. It's called a tweener and sits between genres. Documentaries about something other than sports or celebrities, that can be a risk. And then the risks get bigger. A first-time filmmaker is a huge risk. It's what sales agents called execution dependent. An original film not based on pre-existing material is a huge risk. A scripted film without beloved multiple actors can be a huge risk. A film that challenges a transnational power like China and Russia, that can be a huge risk. So if this is the environment that we're operating in, then we have to look at what is happening to creative risk, the kind of risk that can challenge the language of cinema in order to put forth new ideas and lead to new forms, right? Is that risk being greatly reduced? And if our market, the film market, creates an environment that's hostile to new voices and to new talent, then I think that we have to expect the risk taking is going to migrate to other art forms and to other markets.
And that is kind of historically where the space that you're describing is where independent film has sat traditionally.
Yeah, I think that's exactly right. I mean, if independent film is where it's been at, then let's look at what's happening on the independent side, right? So you have sales agents and buyers who can retreat from certain risks, but independent producers, especially those from diverse backgrounds, they're asked and expected, especially at a time like this, to continue to develop original films without celebrities, with first-time directors. So they're not just taking one risk, but they're taking multiple risks at a time. And of course, producers have an appetite for risk, but that's different being asked to shoulder all the risk in the field, right? And this is happening at a moment when it's never been less financially sustainable to be an independent producer. The recent market shifts that we talked about, it's really transformed what a producer is. A producers these days are not sharing in the economics of successful projects. They're more prone to burnout. And this is personal for me too.
And so even though there may be, more money kind of flooding the market from the corporate side, the that risk has been kind of pushed all the way down to the individuals, especially the independents. And so they are now operating in kind of the face of tremendous uncertainty with, as you kind of laid out, no business model to really kind of rely upon. So something that you and I have both talked about has been like, how do you create a strategy for people to confront that uncertainty together rather than to leave that to individuals to experience on their own? And I think we've also talked about that one strategy being kind of finding a pathway to like collective experimentation, in that, which would address the core issue, which is like in kind of the face of this collapse, you need full scale business model innovation.
I think that's a great way of saying it, and innovation happens every day in independent film, right? It happens in the art form, even happens in financing. But I totally agree. It's what we need are innovation of business models. If we want to find a way forward for the field, it's not going to come from innovations only in financing or form. We have the loss of the home video revenue, the disruption of streaming into theatrical revenue and impact. I think we both agree that we need revenue innovations to protect the art and the business of cinema, right? What we need to do is to zoom out and to meet audiences where they are and to build those paths to do so. So this is where we can segue into talking about the Shorenstein Fellowship. And that fellowship really offered something I don't get a lot of as a producer. It offered time and space for systems level thinking and a real exploration into some of the questions that I've been confronting with these shifts. So that time and space, it was a novelty, but it was a real gift. And the fellowship's focus on documentary in the public interest, that was a new angle for me to consider too, right? So just to say, I'm not a producer of documentaries. I produce fiction. Fiction is a similar, but also a very different world with different financing, different revenue, different behavior altogether. I do distribute documentaries from China, and I do a lot of funding and distribution advocacy work in documentaries. So that's given me a real point of view to observe the changes in US documentary. And so let's pivot to talking specifically about US documentary here. That's really the core of my research.
So within US documentary, you also chose to focus specifically on mid-career or veteran producers. Can you share a little bit more about that decision?
Yeah, that it was a very specific choice. And so back in 2019, I started the first artist residency to support experienced independent producers. And here I have to shout out the Nevada City Film Festival for their unwavering and great support of that program. The support for mid-career producers was greatly needed because, and this is the reason I started it, it's because I found it to be completely absent in the field. And the reality has been that really experienced people are leaving the field. So for those past 5 years, I've been thinking about this problem. I've even been dreaming up solutions in my head. But what I've noticed was a pattern amongst experienced producers of US documentary. It was both the lack of financial sustainability and a remarkable lack of diversity in that class of producers. So those symptoms were my way into researching root causes by really looking at one specific demographic, right? What does the state of experience and independent producers in this field show us in terms of the viability of existing models and the reality of these market shifts? What can we learn by looking at this one group? That's what I wanted to find out.
So with that background, that brings us up to February of 2024 when you began the Shorenstein Fellowship. Can you take us through your research and what you discovered?
So let's dive in. I'm going to walk us through these 5 key takeaways, and these are kind of the root causes of what we're seeing as systemic inequities. And here's a bit of context, right? A real constraint of the fellowship is that it's 4 months long, super short. I had a great research assistant, Joseph Fu. We did over 30 hours of interview research. We did a data survey. We collected data from 8 filmmaker collectives. And we reviewed over 100 pieces of literature on this specific field and on adjacent fields. I worked to create a rigorous consent process so that the participants would feel really protected speaking openly to me. So those consent rules actually limit me from sharing direct examples. So we've designed a synthesis of those examples in these 5 key takeaways, and really would love to have a conversation around that. So, with that caveat, I could have spent 2 years researching this question. And I do have to say, part of that is due to the lack of data and the lack of information that is already organized in the field. So, while 4 months of research wasn't near enough, I'm very happy to share what I learned.
Great. So what was your first takeaway?
So, the first key takeaway, and this is one that we're going to return to in the conversation because it is so impactful. It's that pre existing access to capital is the most important factor for determining success. And let's zoom out a little bit, right? So I started with the a literature review of the US documentary field. That allowed me to read across years, which was so valuable. And I reviewed the most prevalent business models reported on in US independent documentary. My mapping of those models shows that the most financially resilient one was the slate model. So that's a business model that's commonly used in features. It's less used in nonfiction. A slate, at its simplest definition, is a portfolio of projects. A portfolio is a standard investment structure designed to maximize returns and minimize risks. If you have a retirement account, it's most likely invested in a portfolio of investments. So a portfolio or a slate of projects diversifies assets. It spreads the risk of development capital across multiple projects or multiple investments. But to get a slate going, you need investment, right? You need investment to develop the slate of projects. You need investment in your business. You need both. And in US documentary, there's no well-trod path that I could find to get to this model. The handful of nonfiction companies that I read about with the slate model, they're mostly led by those who have won Oscars with powerful agents who help them secure substantial investments. And just the minimum cost of one Oscar campaign is about $250,000. So to go back to the idea of pre-existing access, that pre-existing access I found could also include generational wealth, proximity to celebrity was another path. Even having pre-existing networks in philanthropy that came from prior work experience was also another path.
So it's a model that is only accessible to specific people who already have access to capital, which is interesting. So there's also the studio model too. Do you want to tell us a bit more about what you studied there?
Yeah, I would say the studio model is the next most financially resilient model that I read about in this field. That's a model that comes from television. So it's where an independent television studio would typically receive a production fee, say 10% of a budget, for producing and delivering a TV series to a TV buyer, which would be something like a broadcaster. So this model migrated towards the documentary field when streaming subscription models created a demand for a volume of nonfiction, right? So suddenly streaming execs had to find producers who could produce a series like a TV studio could. That's a fee-driven model, but it does require still some investment to create the company infrastructure that could justify the vetting and the hiring process by a streamer. And so this model, the studio model, still depends on which producers have access to that capital.
So both the slate model and the studio model require access. Are there other opportunities or other models for folks who don't have access?
Yeah, and so that leads to my second key takeaway. The project by project funding model undermines long-term financial stability and drives burnout. Okay, so again, let's zoom out and turn to the qualitative data that I gathered from one-on-one interviews with 22 folks, experienced producers, and some executives in the field. During this process, I asked to meet producers who had achieved some level of financial sustainability by producing US independent documentary features. I didn't look at producers who also direct, which I'm going to say a bit more about later. These conversations were by far the most valuable part of my research, and I'm so immensely grateful to the producers who not only spoke to me openly, but also trusted me with this information. So in this group, the most prevalent model that I found is also the least financially resilient model, and that's a project-driven model. It's what I call a producer-led model. And that's a model where the funding and the revenue are coming from the same source. They're coming from fees that producers earn from producing project by project, right? So producers take on producing a film and they earn fees from the line items in that budget. For example, the office rental line item might help pay for their overhead. The labor line items might help cover payroll for one or maybe two staff members. I mean, sometimes producers plow their own producing fees back into keeping their company afloat. So the fee-driven revenue is used for company financing, but it's never enough. And in this model, the question of sustainability changes, right? Because it becomes equally about mental and physical sustainability. And you might have guessed, Gary, that this is the model that's most prone to burnout.
And it resonates with a lot of other industries where salaried labor is being replaced with freelancer labor, and which is then being replaced with gig worker labor, which is absolutely going to lead to burnout or precarity in the very least. So if we go back to the kind of the importance of like access to capital, like have you thought through whether there are any other options on the table?
Yeah, so I should say I did see in my research a slightly more resilient variation on this producer-led model, and that's one that uses philanthropic capital to cover company overhead. And so, again, some producers have access to philanthropic capital, whether those are impact investments or grants that they're accessing, and that helps with the longer-term survival. But again, access is important. Um, so yeah, I mean, this is the only model that's in reach of producers who don't have pre-existing access to capital. And at this point, I should note that I did speak with some veteran producers, those with 15 to 20 years of experience, and they said that they willingly chose this model, right? They chose it to avoid the expectations of taking on capital that would want them to scale, or they chose it to avoid the responsibility of payroll. And a couple others said that they chose this kind of project-based producer-led model as a way to stay rooted in activism, right? Of seeing producing as a form of cultural activism, as opposed to taking on a revenue or an investment structure. So I completely understand that because it's why I started producing. I produced 10 feature films in 10 years about women and people of color on this model. Um, and I suffered from the same kind of burnout, a really physical burnout that I could see in the mid-career producers that I was speaking to in this research. None of the mid-career producers that I spoke to that's people with 10 to 15 years of experience. None of them identified it to me as a choice not to have an investment or funded overhead structure. And one of the mid-career producers I spoke to, she kind of said it best. She said, power consistently attaches itself to relationships rather than hard skills. I mean, that's it in a nutshell.
Hmm. So let's dig into that a bit more. These scenarios don't really sound like people are being set up for success here. Um, and some are finding ways to make things work, but could we dig a bit more into kind of what else you are seeing amongst this set?
Yeah, I think, that's a great point. So, what I started to do to understand this, and it wasn't hard to understand, I just needed to follow the money, right? US independent documentary is nearly completely reliant on philanthropic capital and public media spending. For many reasons, this external financing organizes itself into project-based funding, which means you apply to one fund, one project at a time. And each documentary film can take years, right? The funds themselves can take over a year to just respond to your application. Then you do it all over again for your next film. It's the spiritual equivalent of living paycheck to paycheck, but without an actual job to know where the paycheck is coming from. Really, a better analogy is being a gig worker. And a net effect is that producers spend time and energy on what will pay the rent as opposed to developing new work. So I think about the stories and the voices that are not being developed, and I see that as a real cultural loss. So I would say for the overwhelming majority of producers, it's not far-fetched to say that the project by project model is untenable. Um, I mean, even more so, you could say that the model itself contributes to field-wide unsustainability. That unique tension between this project-based funding and the duration of documentary projects, I think it makes it even more excruciating. So unlike indie fiction films, which we shoot in 20 days, 30 if you're lucky, documentaries can take years. And one mid-career producer of color I interviewed, she said it really well. She said, every year after the third year is a loss. Either you're working for free or you're in debt.
And so this kind of goes back to, the definition and this theme of risk that you raised at the beginning. And instead of the risk kind of, the risk that used to sit kind of upstream effectively just is being pushed all the way down to the bottom of that kind of supply chain, so to speak. And, it's that project-based model that where you see kind of all that risk being absorbed by the individuals. Um, so I can kind of imagine that like financing one project at a time actually just increases the risk assessment per project.
Absolutely. If you look at one project as its own financing vehicle, which is what we do on a project-based model, then every single project worth making is going to feel risky. The most minimum deviation from the commercial formula is a risk. You can even say that the project model reinscribes the risk of documentary filmmaking. That perception of each independent documentary being a massive risk reinforces the need to depend on funding that does not need to be recouped, right? In comparison, a slate of documentaries builds in a greater tolerance to risk than financing every project on its own. That said, a slate has to include projects with significant upside, and producing more commercial projects also requires a different kind of access to those subjects or to those issues. One thing I didn't have enough time to research, but I'd love to learn, is that in this moment of market contraction, which financially sound businesses have slates that are still taking risks, and what kinds of risks are they able to take these days? We have the loss of two revenue streams. Have those companies had to default to the streamer appetites? And how narrow is that slice of perspectives and stories?
Right. It'd be fascinating to be able to dig in to see what are these different slate strategies and exactly what comprises these. Because just pulling together a risk of a slate of high risk projects aimed at a collapsed market that doesn't exist anymore doesn't necessarily make things better.
Right. And the opposite could be true too. Pulling together a slate of very commercial projects only doesn't necessarily advance the things that we care about in the field and about the form. So I would say all of this is related to my third key takeaway, And that takeaway is that there is a great need for early stage capital to invest in resilient business structures, as well as to develop a diversity of talent and ideas. So again, let's zoom back. In documentary, you often need written and visual materials to raise the film budget, right? So most of that work is self-financed. Think about who can afford to self-finance a work sample. Another another angle we can look at this is to look at what's the money in the field available to documentary filmmakers of color, right? So besides there are a few project development grants, the majority of BIPOC filmmakers, they look at funding from public media organizations. That money that's provided as development funding, that money is tied to what I would call first dibs on a film's broadcast rights, right? So signing away certain revenue rights to secure development funding in order to raise financing for production. So you can see this one area where all three of these key challenges so far converge. A lack of pre-existing access to capital paired with the field's lack of early stage financing paired with the project-driven model. It traps independent filmmakers into a model that offers little or no leverage. So this impact of access to early stage capital, it really directly determines who gets the resources to develop and make films. I mean, you could say that it decides who gets to tell the stories and what stories get told. Um, there's an argument to be made that this early stage capital, whether it's startup financing or development capital, it's by far the most impactful capital in the business.
So this challenge of access to early stage capital, or the dearth of early stage capital, is that unique to U.S. documentary, or do you also see that across fiction filmmaking as well?
Yeah, that's a great question. Because what we're seeing on the fiction side is that capital for slate models is under threat as well. That's a traditional source of monies for producers to develop slates and build enduring brands and businesses. There's an interesting quote that I read recently from a William Morris agent, and he's explaining that producers are really undervalued because we are seeing studios cut producer overhead deals. Many of those producer deals are being replaced by actor or celebrity deals. And the agent points to Universal Studios, who's cut the least amount of producer deals. And he says, those producers didn't build franchises, they built empires. What I like about that quote is that it highlights the infrastructure and the small bit of capital needed for producers to build businesses and not just be project managers. The other thing we're seeing right now is a group of 100 film producers called Producers United, some of whom are Oscar winners. They've pointed out that the standard development fee in Hollywood has not changed in the 70s, which was $25,000. In today's dollars, that would be $200,000. So producers on the fiction side, they are seeing that model collapse too, and they're hurting and they're trying to survive too.
So So you mentioned Producers United. And this is clearly not a sustainable situation. Stepping back and looking at kind of the communities, how has this affected the communities that exist around filmmaking?
Yeah, and here's where we get to the fourth key takeaway, and that is funding biases inhibit diverse creative communities from owning their successes, while also limiting project scale and audience reach. So this takeaway came from a 5-question survey that I sent to documentary filmmaker collectives, Asian American Documentary Network, Brown Girls Doc Mafia, few others. 8 collectives responded. The challenge here was that no collective had data on which of their members were producers only. And so I had to work with the leadership and we made our best estimates. And what I found across the board was an average of 1 experienced producer per 500 filmmaker members. 1 producer with more than 10 years making independent documentary features per 500 filmmakers. So let's talk about what that means for these communities, right? Experienced producers hold access to funding, they hold distribution knowledge. So without those experienced producers, those films can get shot, they can get edited, but they probably don't get to real production scale. Without those producers, these films get to film festivals, but they don't reach their full audience potential. They will especially struggle to sell a film without an experienced producer, and which means those films are not getting to the diverse audiences that they want to serve.
So there's really kind of 2 points in what you just said. One, there's a glass ceiling in the form of like funding biases, but there's also a bit of like um, a, a gap or a pipeline collapse in the development of producing talent in the ecosystem as well. And in particular, that diverse communities suffer because of both of those factors. There are few enduring producers in the communities, also because of like the ceiling issue. So just focusing on that issue of the lack of producers, without them, they don't have access to financing and distribution, as you've mentioned before. I can also kind of imagine that those producers carry a tremendous, then burden for the entire community.
Yeah, that's exactly right. So let's look at this kind of subset demographic of producers of color. And I would say in my research, I didn't find any experienced producers of color who had achieved a financially viable business structure producing US documentary features. Again, not talking about producers who are directors, but let's just say, like, that's not an inequity, right? That's a systemic failure. What I did see repeatedly were highly experienced producers of color working in physical production as a way to make ends meet. These producers of color are hired as line producers, as field producers, even as heads of production because they have earned those hard skills. But again, I wish this was a space where I had more time to do that research.
And so this is a real, I mean, this is a real gap or hurdle in the system for producers of color. They get to a certain degree and then they can't really kind of get beyond that.
Yeah, I mean, in the brief conversations I've had so far about this research, that idea of a clear glass ceiling around race has been a controversial conclusion. And I think it's hard to accept that kind of truth about one's field, especially documentary is a field that proclaims to be issue driven and mission driven. So I hope to be proven wrong. Maybe my research didn't go far enough. But honestly, the way I feel is whether there's one or two exceptions, what this ultimately says to me is that the real and true value of producers from diverse communities, that value is unseen. And their sustainability is not a problem that's often considered by the field, right? In my interviews, I did talk to a few nonprofit executives, and one of them, very well respected, she laid it out for me. And I'm going to read her full quote because I think it's important. She said, "If part of the value that you add to a film is to raise the money for it, as opposed to being an active producer, then that role depends on your ability to build and sustain ties with people who have money. Their role in the ecosystem depends on keeping the money close to them. And there's a racial component. If most of the people who have money are white, are they more comfortable talking to a white person as an intermediary?"
So to go back to the distinction you're making between producers who only produce versus producers who also direct, was that a path then, like to move producers of color beyond the glass ceiling?
That was interesting to me. I learned about that being a different path. I think that's distinct in documentary, right? Multiple documentary producers I interviewed talked about the need to turn to directing. And one nonprofit executive explained it to me. And she said, quote, "I see producers, almost always women, to feel like they're progressing, and for validation, they have to direct. Does that mean that the field is oriented towards supporting and uplifting directors only?" On the producing side, there are programs, right, to encourage, especially emerging producers. There are producing labs. But the irony is that those producing labs are also project driven. Of course, that's valuable. Of course, they learn a ton. I've taught at those labs. But what that does is it masks the need for longevity. We, and I'm including myself, we start out by learning to treat our projects as businesses, not our livelihood as businesses. For example, you don't see the slate model being taught in a producing lab. Most of that sustainability work in the lab and in toolkits, they focus on a project's life, not a producer's.
So it sounds like the documentary producers you found who made it work came into the field with some pre-existing access to capital, but not everyone has those privileges.
Right. So let's go back to the key takeaway number one. So much of it is based on pre-existing relationships and philanthropy or proximity to wealth or celebrity. I did come across a handful of veteran producers who hire and mentor producers from historically excluded communities. And that's amazing, but a few individuals does not counter systemic failure, right? So in my documentary research, other than one exception, I did not encounter a producer who worked their way up from the bottom of the hierarchy to the top. Most of the quote unquote successful producers I was pointed to came into the field with connections, with money, with a career and experience producing fiction, maybe with philanthropic experience, with celebrity relationships. So that was really interesting to observe. And that's related to my last and fifth key takeaway.
So it sounds like kind of what you're describing. It's not just a business model collapse that is causing a lot of change. That whether this is related to it or not, there's also these pathways for development and growth that you'd expect to exist in a healthy ecosystem. Those pathways have been fractured as well, and those are problems that need to be addressed.
Absolutely. And I would say that that's related to this fifth key takeaway. And that is that the opacity of information keeps power concentrated in the hands of the few, while proving the really urgent need for more information sharing. Just to, make a personal reference, this reminds me of a speech that I remember from writer and actor Michaela Cole. And she says something like, while I'm not going to offer you mentorship, I can offer you transparency. And that highest value that she places on transparency, it feels absolutely right to me, And back to my research, from my interviews, I learned that there's very little information that's shared publicly or even privately about company financing, about project fees, about individual finances. I could actually see the lack of information sharing hurting of a few of the producers I interviewed, right down to information that if they had it could make or break their business structure in a negotiation with a streamer. And so that desperate need for more information sharing, it came up again and again in my research. What's more is that there's a lack of access sharing. There might even be what I call a hoarding of access. And that's the hard part to say out loud. I understood this behavior as a scarcity mindset that was created by the source of capital. Look, philanthropic capital can rise and fall with the economy. It can face political conditions imposed by donors. It can hold arts practices to charitable purposes only, right? And grants are apportioned in small amounts, project by project. So in this kind of environment, long-term access to philanthropic capital is gold. My research even turned up business structures that are designed to intentionally guard access to individual sources of philanthropic capital. And I have to ask, how does that focus on survival help the field?
Right. And I think that is where if you zoom out and you look at these behaviors that you're describing, it's recognizing that the industry is kind of locked in a state of scarcity, right? The hoarding of information and access. And really the key problem is not about mitigating some of the symptoms. It's how do you take this industry from scarcity and move it to a state of vibrancy? Because to just get beyond, your survival is insufficient. So I guess like there don't seem to be a lot of obvious solutions in how you do that.
Yeah, I mean, you're exactly right. And let me try and parse my overall research takeaway here, right? I went into the research looking at producers, but I came out of this fellowship thinking about business models and the overall ecosystem. This survival state of producers is both the symptom of the funding and the revenue models that exist in the field, right? So, for example, I could say that US independent documentary is an art form without a business model, and maybe it always has been. But now pair that with the massive shifts in the market. All of that makes me realize that if we want to find a way forward for the field, not just for producers, but for the health of the whole ecosystem, it's not going to come just from innovations and financing. We need to zoom out and build paths to meet audiences where they are. We need to expand our lens from feature-length films. We need to do things that haven't been done before. And that's hard. I get that that's hard. I do think that some people will camp out in the corners of the business that still work. And I think other people will be willing to engage and reinvent and confront this head on. But I think honestly that the entire field is facing an identity crisis. And for me, the space to take risk, the financial sustainability of creators, the satisfaction of audiences, it all comes out of having a healthier ecosystem. And that comes from new and better revenue streams in order to that can allow us to uphold the space for creative risk while paying makers a living wage. So at the same time, and this is a really important point, so I want to emphasize this especially, we need to accept that the role of independent producing must adapt to this new environment. So I really hope this goes without saying, but these root causes and my research, they are not making the argument for more diverse producers to work in the system. There have been tremendous efforts to ameliorate the problems and to provide support, but from a systems level, the level that my research looks at, that analysis is one mostly of an unsustainable project-driven model dependent on access to capital, burdened by bias and hampered by opacity. The lack of more diverse producers in this system is not a gap to be filled.
Right. That is not the core problem. If anything, it's kind of, an indicator that it's a time of reinvention, perhaps for the independent producer's role to adapt to the new environment. And so I guess, did your research also look at kind of ways of adapting?
Yeah, absolutely. I included a kind of equal amount of time researching what I call adjacent fields. Those are fields like fiction, video games, publishing, comics, mixed reality, theater. My research assistant and I spent some time reviewing everything we could about the business models in those fields and in recent innovations. And the contrast was immediate. It was really striking. We read about reinvention, about radical change, about transformation. I mean, it was clear that these fields were on the offense. They knew they had to reinvent their models to meet the moment.
It's fascinating because I think, it circles back to a question that you and I have been discussing. How do we create infrastructure for collective experimentation in a context where there hasn't been any before? And also just that, I think the other theme that comes from this, from what you've been talking about, is that like business models are kind of like art forms too. They evolve through iteration and experimentation by a collective group of people over a period of time. And, what we really need to do is figure out, how do we can encourage the independent film community to boldly experiment and venture beyond traditional models.
Yeah, I love that. I love that analogy of business models to art forms. And let me say that there are some films that sit far outside any business model, and that's where philanthropy is incredibly valuable. Unequivocally, we need philanthropy to continue grant making for films like that, right? The crisis comes when philanthropy is being asked to fund all the things because everything feels like it sits outside any business model. So in this environment, we've been talking about how philanthropy has a new role that it can play, right? And that's a really interesting role. And that's a role to provide new infrastructure for new models, to create the conditions for filmmakers to navigate risk and confront uncertainty and pursue that kind of business model innovation. I've recently read some great things in the philanthropic space about supporting a democratic practice that's about collective action, about holding power accountable and fighting for change. And in that practice, a thriving culture plays a really important role.
Right. And taking on new bets is important in an environment where the old models are failing. And, the key to uncovering new possibilities, making progress for all, is to try things that have the potential to create new markets. To take on risks, to take on bets, and to keep it a collective and inclusive effort so that there are many solutions for each of us, and rather than, just one option, one solution for all of us.
I think what's really exciting to both of us is the emergence of what we don't know and what we don't expect. New storytelling forms can lead to new markets. New production methodologies can definitely lead to new financing strategies. New financing strategies can bring in new sources of capital. New distribution tactics can lead to new audiences, right? We need to innovate on the revenue streams that we do have, but we also need to dig paths for new ones. And I think it's really important to restate what you just said. We're not looking for a single path that works for everyone. We're looking for many paths. New structures, new markets, new models will allow for the emergence of new ideas, new talent, and new forms.
And what you get with new markets and new opportunities are new opportunities for creator sustainability, right? And then you get new conditions for creative forms to emerge because people are out of this kind of survival mode trap that they're in. And really, I think the hard part about this is the key thing really to all of this is that there needs to be some effort of collective risk taking and the ability for the lessons from those risks to kind of make their way back into the field, versus everyone just playing a single player game. Like this is a multiplayer situation that we are in. And it's also kind of an interesting, it's an interesting to kind of think about how you would design a system like this, right? How do you align the interests and behaviors at the ecosystem level, at the funder level, so that everyone actually can play a meaningful role in this? And I think the risk here, to maybe overuse that word a bit, is that if you can't align these pieces to create an incentive for experimentation, then you have no experiments. And you have no experiments, you have no learning. And if you have no learning, that, any kind of hope of progress kind of goes out the window at that point.
Yeah, and I think that the key thing you said there that really resonates with my research, it ties back to that fifth key takeaway about the opacity of information, how that's harming folks right now. So for the health of the field, like we need to share information, we need to share insights. And I get that that's a massive challenge, right, given the current norms and behavior. But maybe that's an opportunity to create a structure to allow that to happen, right? Learning is only going to happen if people are willing to talk openly about their successes and their failures.
I think that is maybe one of the least well understood things about the growth of tech and venture and software backed startups is that there was always a strong incentive for all parties, whether they're investors or entrepreneurs or even the employees or the LPs that are funding the VCs, to actually engage in this practice of like openly sharing kind of their successes and failures. In some cases, it's a marketing tactic. In other cases, it's a support tactic. But that ability to kind of learn from what people have done before, the incentives around that, that is what has allowed kind of that system to thrive. And then moreover, the fact that a failed entrepreneur in that ecosystem doesn't actually exit the space. They come back as an advisor. They come back as an investor. So the relationships, the knowledge, the networks, all that information, it stays within the ecosystem, and has what allowed that ecosystem to kind of grow, learn from the mistakes, and hopefully kind of get better, over time.
Yeah, I think the spirit of that is really important. We need to help each other progress together.
Karin, this has been fascinating. Thank you for this conversation and sharing your research with us.
Thank you so much, Gary. And thank you for giving me the space and holding a conversation to share that. It's really been a pleasure. Thank you again to my awesome research assistant, Joseph. Thank you to everyone at the Shorenstein Center and at the fellowship program. Let's keep going.